Hi everyone and welcome to my morning report chart appraisals on Monday the 1st of December with me, Richard Perry, market analyst at Tech Markets. The European trading sessions got off on a disappointing footing. The Chinese manufacturing PMI came in disappointingly overnight, and that certainly put pressure on the futures, and the correction has certainly continued. Oil prices and gold continue to fall away, and that is certainly putting pressure. Well, certainly with the oil price, that's putting pressure on the oil stocks around Europe, and any countries with a high weighting of oil stocks, i.e. the UK, has come under significant pressure to the downside today. FTSE's off 1%, DAX only off 0.3%, but still it looks like the outlook for equities in the European trading session is fairly negative. In terms of forex, it's been a bit choppy. The dollar initially had found a bit of strength, looking to break out, but it sort of had a bit of a correction since then, and certainly one of the drivers behind that has been this downgrade that Japan has had from ratings agency Moody's. Downgraded its outlook from AA3 to A1 amid a heightened uncertainty regarding fiscal deficit reduction. And certainly that has led to a flight into safety. The yen has strengthened on the back of that, and the dollar has been put under a bit of a corrective pressure. So the euro and sterling have both bounced. In fact, it's a bit of an odd performance on the euro today, because the euro has actually strengthened despite the fact that the PMI data throughout the Eurozone is pretty much across the board been negative, and certainly Germany dropping back to 49.5, which is into contraction territory. That was worse than expected. Also, the Eurozone wide data 50.1 was also worse than 50.4 expected. So it's a bit of an interesting move that we've seen on the euro today. It's just started to strengthen a bit, and I think that's more to do with the fact that the dollar has weakened today. But sterling has actually strengthened because the actual manufacturing PMI data for the UK in the last few minutes has come out better than expected, and that has certainly added to a bit of sterling strength in the as the European session has got going. Now we're looking towards the final bit of important data today, which is the ISM manufacturing data for the States, and that's expected to come in at 58.0, so just down slightly from 59, but certainly the States remains very much of a guiding light in terms of the global growth, and certainly in the fact that China disappointed today, and the Eurozone as a whole, as a collective, has been disappointing. You'd certainly be hoping that the States can come out and sort of balance off that, because otherwise that there could be some considerable questions being asked in terms of global growth going forward. As I said earlier, in terms of the gold price, the reason the gold price has been weaker has been on the back of this referendum result in Switzerland on the Swiss gold initiative, and that was resoundingly beaten into the negative, and the no camp got 77% of the vote, and that certainly has put pay to any sort of prospect of the SNB buying up gold stocks, and the gold price has significantly dropped on the back of that. So what we've seen is that move, but that sort of takes me to the Swiss franc, which is my chart of the day. Swiss franc continues to be playing the opposite trade or the dollar Swissy anyway, continues to be completely the opposite and negatively correlated to the euro dollar chart, and the price continues to go higher in this nice uptrend since mid-August, continues to find support at the uptrend and push higher. Now we've seen initially today, we've seen a slight decline in that, but we've still got this sequence now building of higher lows. Having broken this sequence of lower lows and lower highs, we've now got this movement that's coming up again. So as long as the support can stay intact around 96.17, then I think the outlook for the dollar Swiss continues to remain fairly strong. I still think it looks like it's building once more for the next leg higher. I think for a test of that 97.31 level. And if you look on these momentum indicators across the board, pretty much momentum very strong. RSI and MACD lines all now camping nicely in the positive territory as this uptrend continues. So it certainly looks like the outlook remains positive for a test of the highs, and I think that is what you'll see. As long as this certainly on a near-term basis back on the hourly chart, that 96.17 level can remain intact. So I wish you good luck in your trading on dollar Swissy today, and I will speak to you later.